Welcome to the channel Get Rich. Today we are going to look into top 10 mistakes stock market beginners should avoid. So let's get into this video. So as a beginners, we make a lot of mistakes. It gives a bad perspective about stock market as a whole because most people says that it's a place to lose money. This is because we make a lot of mistakes as a beginners and we lose money. So let's see in this video top 10 mistakes beginners should avoid to be successful in the market. So let's start with the first one. Buying a stock without proper analysis or understanding. So just buying a stock just because somebody else bought this stock is pretty bad. So we should understand a stock before buying it. So we should not buy a stock because Warren Buffett bought it or because Porinji bought it or somebody in CNBC mentioned a great stock and we should buy it. So we should not solely rely on somebody else. So solely relying on somebody else is a very bad idea because we don't know why that person bought this stock and the rationale behind this stock. So we should understand why this stock should go up or what is the rationale behind this stock for the investment, because we don't know if he just copy some investors. So we don't know why he bought this stock. Is he going to sell in 1 year, 2 year? What is his price target? We don't know anything. So it is okay to copy or mimic great investors, but always we should analyze and understand the stocks of great investors. If it is appealing after analysis, then we go and buy at our own responsibility. We should never blame anybody else for our loss. So we should always take responsibility. So if you think you don't have enough knowledge and time, then please stick with index funds or mutual funds until you acquire a knowledge for stock picking or analysis. Then let's see the second mistake stock market beginners should avoid. So buying the peak after significant market rally. So always you could have heard a term FOMO, which is fear of missing out. So you see a stock going up like 10%, 20%, 100%, 200%, and then you go and buy at that price. So buying at any price is bad because some smart investors take profit by offloading shares on you, and when the market goes down, we retail investors panic sell and those smart investors buy that stock cheap. So we should not buy high and sell low. We should buy low and sell high. So we should not buy at the peak of the market. So please don't buy at any stock at any price. So always do analysis, is the stock worth to buy at this price? So don't do this mistake. Always analyze and see what price you are paying for and what is the value you will get out of the share. So don't buy a share at the peak of the market. So always understand where the share cycle is, and always understand the value of the stock, and then do price analysis, and then you go and buy a stock if it is undervalued, and if you feel it will be worth more in the next coming years. So this is the second mistake. So let's jump on to the third mistake most of the investors will do. Investing all money in penny stocks or risky stocks. So this is a very dangerous. Investing all money in risky micro caps or penny stocks to get rich is very dangerous. More often it will be the reason we lose most of our money. Always a well built portfolio has a base of strong large cap stocks to provide stability, and then we should have some quality mid cap stocks on top of large cap stocks to provide some growth and also some stability, and then some small cap stocks and maybe 10 to 15% of micro cap, because which are often difficult to predict the future in the micro caps. If you invest in all on risky stocks, there is more probable that we lose most of our money, because this is not the way we can get rich by investing in penny stocks and risky stocks. So please don't go all in on risky stocks. Even well-known large cap stocks can generate significant wealth over time. So don't have a notion that if you invest in penny stocks you can get rich. So don't do this mistake. Don't invest all your money in penny stocks. Always have a proper diversified well-built portfolio which you should preserve wealth Also, whenever you generate wealth, you should preserve that wealth. Also, you should not lose all your wealth once you have a big portfolio. So always make sure you have a balanced portfolio and don't go all in on penny stocks. That's the third mistake. Then the fourth mistake is not having a plan or strategy. So you should always analyze or ask yourself, what is my objective? Is my objective is to generate wealth, or is it for my house or for my child education, or what is my objective for investing? And you have to, out of that question, you have to find out what will be my time frame for investing. So based on the time frame, you can have a proper portfolio allocation. So based on the time frame, you can choose, okay, my time frame is 5 years, then we should go, I should allocate my portfolio, for example 30% to stocks, or 25% to real estate, and so on. So if your time frame is long enough, like 10 years, then you can go almost 60-70% stocks. So these are all based on your proper objective, what's your objective and what's your time frame, and you should have a plan. So then you should also have a proper entry and exit strategy. Even for long-term stocks, what's your entry strategy? Are you going to dollar cost average, or are you going to buy at one single price? What's your entry strategy? If you don't have a plan, you probably might lose on the way. So you should have a proper entry strategy. So you should always think of, okay, so first, many people have many different strategies. For example, if you have to have a entry strategy, okay, maybe I'll buy 25% at this price, next 25, if it goes below that, okay, then I'll put another 25%, and then and so on. Or you can do dollar cost averaging at many price points. So you should have a plan, or you can buy all at once if you are so confident that price is at very low, but you should have a proper entry and exit strategy. Also, nowadays, stocks can incur fundamental change easily with a rapid technological disruption. So make sure you have a plan of entering and exiting a strategy. Then the fifth mistakes we as a stock market beginners do is not analyzing the risks of the stock. Usually we calculate the reward. So if this and that happens, this stock can go up 5 times or 300% or whatever we calculate. Often we forgot to calculate the risks in that stock. What is the probability that these stocks can go down so or so percentages? What can go wrong in this stock? So always risk versus reward calculation is the key. So for example, if you look these two scenarios, so one scenario, one stock can give 10x returns over 5 years with a 70% chance that it can go down by 70%. This is the first scenario. So the second scenario is another stocks which will give only 5x returns instead of 10x return over the 5 years, but it has only a 20% chance that it can go down by 20%. So what would you choose? In my case, I would go for the second option because I'm almost certain that my downside is pretty much limited and my upside is 5x over 5 years. That's enough for me. You can choose one, depends on your risk taking capability and so on, but you should always do risk versus reward calculation. That is the key. So risk mitigation is key in wealth preservation. So don't do this mistake by not analyzing the risk of a stock or your portfolio. Always analyze the risk as well. So then the sixth mistake is thinking how low this stock can go. You should know the phrase catching the falling knife. So some people will think, okay, buying the stocks which are 50 to 60% down, that's a very good strategy. Yes, that's a very good strategy, but then you have to understand the value of the stock as well. So some people think buying cheap stocks which are trading at low single digit PE is a very great opportunity, but not analyzing why is it trading at such a valuation is a sin, because there will be a reason why it is trading at such a low valuation. So buying cheap is good, I'm not against that, buying cheap is good, but at the same time we have to understand why it is trading that low. Is it for a temporary reason? Is it because of some bad news or some bad economy? Why the stock is trading this cheap? There must be a reason. Always market is smart, so there must be a reason why the stock is down. So please understand that stocks can even go to zero. So in this case, you can see in the graph the end run share price, it just crashed to zero. So always understand the stocks can even go to zero, and if it is a cheap stock at a very cheap price, analyze why it is down, and if you find the reason appealing and it will be over in a year time or in a month's time, then okay, you should have a conviction, then it will turn around, then you go and buy that stock. Don't buy a stock just because it is 50% down or 60% down. There are more probability that it can go even more down. So don't do this mistake. So the seventh mistake is thinking quality stocks are expensive and not buying any. So not buying quality growth stock is a sin, I would say. So always buy quality growth stocks, even if it is a bit more expensive than cheap stocks, because it's very quality stock and it is growing pretty much. In that case, you can pay a bit more premium for the stock. I'm not telling you can pay any money for a quality growth stock. You should have your valuation checked. So buying quality stocks at reasonable price is important. So instead of buying a cheap stock or a low quality stock at a very cheap price, buying a quality stock at reasonable price is very good. So don't caught up with, for example, Amazon is a very good company. It was expensive over the past 10 years. It was always expensive, but it kept growing and it gave huge returns to the investors. So don't do this mistake of not buying quality growth stocks. And then the eighth mistake is not taking profits at the right time. I'm not against the long term investing. So I'm a long term investor. I would like to hold my stocks for 5, 10, 15 years. But now there are more and more fundamental and technology changes, rapid disruption. So you should always take profits at the right time. For example, if the stock went up by 10, 15x, so much in a short amount of time, and the PE ratio shot up to 100x or 100 PE ratio, and then you should be cautious. It is so much valuable. Whether you have to always check whether the price reflects the value of the company it provides. So if there is a mismatch, it's nothing wrong in taking some profits. I'm not telling you to close all of your the stocks. If it ran up so much, it's okay to take profits. It's okay to sell 10%, 20% to take some profits if it ran up so much. So always do proper profit taking and analyze the value versus the price. It's the current price. Selling too early is also a mistake, and not selling at all is also a mistake. So always you should have a balance, not selling too early and not selling at all. So you should take profit but not too soon. So yeah, that's the eighth mistake people might do. So not taking profits at the right time. And then the ninth mistake is emotionally attaching to a particular stock. So for example, if you say no matter what happens in the company, a fundamental change, technology change, management change, whatever, I blindly believe it is a great company and I continue to hold. So in this case, most probably you are emotionally attached to the stock. So be rational with your investment and do timely checks of your company. If you made a wrong investment, please correct it as early as possible. It's nothing wrong in making a wrong investment. So nobody can be 100% perfect or 100% correct at all the time. So if you made a wrong investment, please correct it as early as possible. It's okay to sell at loss and correct yourself than losing all of your money. So don't hesitate to admit your mistake and learn from it. It's okay to do mistakes. So don't hesitate to admit your mistake and learn from it. And always don't emotionally attach to a stock. Be rational. So listen other opinions and think rationally. If it makes sense, probably you should consider it. So if probably somebody else says something wrong about the company, and if you really like the company, it's okay. So listen what they are telling and analyze it rationally, whether what the person is telling it's correct or not. And then if it is correct, you should probably consider it. So that's the ninth mistake. And the last one is not learning from our mistakes. This is a huge mistake most people will do. So we all make mistakes. Nobody is perfect. It's okay to do mistake. If you are doing mistakes, you are trying something different. So if you made a mistake, just keep calm and learn from it. There is nothing wrong in making mistakes. And also, don't give up on something too soon. You might be digging at 99th feet and there might be water at 100th feet. So don't give up too soon. You might lose money at the start, but and always keep learning and go ahead. So if you hang around near a barber shop for long enough, you will get a haircut soon enough. That's the saying. So if you just hang on off long enough in the market, you will find a way to be profitable and successful in the market. So not learning from mistakes. That is why most people in stock market lose money. Never make a same mistake again. To be honest, I made a lot of these mistakes when I am a beginner. I made huge loss of my hard earned money. Of course, it was painful. Now, if I look back, that's the best thing I did in my early days because I would never do that mistake again with a bigger portfolio now. Because at early we just starting with small amount of money and losing that money is good. Learning losing small amount of money and learning the mistake early in your career is better than learning or doing by mistakes at a later stage. So it's okay to do mistake. I did a lot of mistake back then when I was a beginner. And then what I did, I analyzed what went wrong. So I kept learning and I did not quit the market. Even at I saw my portfolio went down by 60% at some point of time. 60%, 70% even. Huge losses. I was in most of the penny stocks, huge losses. It's painful. But now I recouped all my losses and made very good profit on my investments because I kept learning and I did not quit the market. So believe in yourself and keep learning and you will be successful at some time. So that's all for this video. So if you like this video, like, share and comment. If you did not subscribe to my newsletter, please subscribe to my newsletter in the link below. And thank you for watching and have a nice day. Bye bye.